okay, let's bring this home to Calgary. What do you say it's an uneasy day? For some obvious reasons, but what is this going to look like here?
Well, I think we will see what it does for manufacturing companies that are built that are selling into the States. You know, we have a lot of cross-border trade. There's the agriculture sector, food processing. That's going to be challenging. And I think, you know, broadly speaking, you know, if you're importing something from the States and exporting and 25% tariffs on those goods, it means that consumers, if they don't have a substitute like Tim Hortons versus a Starbucks, for example, they will have to pay more for the goods that they consume. And that means less disposable income for other items. And that is net negative for the economy, broadly speaking.
We had a beef producer on, used the example of, you know, a cow can cross the border 7 times.
And an auto manufacturing part can cross between 6 and 8.
Yeah, before it's a burger or before it's a whatever you're manufacturing.
Yeah.
So really quite complex in terms of the application of tariffs and then supply chain issues that this might create.
And then think about the Canadian subsidiaries of U.S. companies.
Yeah.
And what does that mean? I mean, there's just...
So what does that mean?
It's very complicated. What does that look like? How are they treated because they are owned by a U.S. company? Is the tariff levied in the same way? Good question.
Yeah. So let's get into the energy sector here, which is different than the rest of Canadian goods crossing the border. Oil and gas at a 10% tariff, at least initially. What does that mean for our energy industry?
Well, net, it means that what it says to me is that the voices in the White House around President Trump are realizing that energy is important to the U.S. economy, that to put a 25% tariff would be hugely inflationary as it stands anyway. It will be a sticker shock at the pump for Americans going to fuel up, because it means, you know, as much as 30 cents a gallon. And again, that takes a bite out of your pocket. And if you're still living in an inflationary environment, that's the last thing you need. So that is something that we can recognize that we won't be hit as hard. Having said that, the differential, the price between WTI West Texas Intermediate and Canadian Heavy is going to get bigger. So that means that, you know, what we net from a U.S. dollar perspective for a barrel will be lower. But with the dollar trading at lows that we haven't seen since 2003, we do get an uplift on the exchange rate.
Yeah, it's interesting when you put all those things in context, what this is doing for the value of a loonie and the price of oil. And that's just this morning.
Yeah.
Markets and these commodities will continue to react.
Yeah. No, and I think that's where, if you're trading in U.S. dollars, you do get an uplift from the fact that the dollar has weakened. And let's be honest, I mean, we've actually hidden behind that weaker dollar and ridden on the uplift from the currency exchange for a long time. And people argue that that's one of the reasons.
This is people exporting energy and otherwise.
Absolutely.
Yeah.
All natural resources. And of course, the economists have said we've hidden behind that, and it's masked our productivity problems. So it's another conversation. But this is not to be taken lightly in any way.
Yeah.
I think the fact that the Bank of Canada dropped rates last week is encouraging. I think we'll probably see another full percentage point down by the end of the year, and that is something that we need to see the cost of borrowing continue to fall.
Okay, so let's get into the Canadian response. 2 phases of retaliatory tariffs. You put out a statement from the Chamber on Saturday calling on Ottawa not to hit back. That got a reaction. Also, the circumstances have evolved since then. Can you just talk about the evolution of the positioning and how you see it now?
Well, in the best of all possible worlds, you find a solution so you don't have to move to tariffs, and that's the preferred route. Obviously, if somebody punches you in the nose, you're not going to stand there and wait for them to punch you again. So we have to do something that is going to be felt by U.S. consumers, which is what's happened in the past. We've always been very targeted in terms of the response that we've had, and that's exactly exactly the strategy that the Canadian government is taking, and we support that.
You do support
We do. We have to do something, and we can't seem to be just standing idly and not responding, because it is going to hit the Canadian economy, and we need to make sure that industries and consumers in red states will also feel the impact of what we will do in return.
Interesting that you were paying attention to what's on CNBC this morning, for example. Like, I know the Prime Minister's remarks were not taken live by any big American networks. So how this lands for people in the U.S. is a really important detail.
It is. And I think that that's, the conversation this morning was as much about, what do we do about the porous border and fentanyl as it was about the inflationary impact, what it means for U.S. consumers. And that's one thing that, and the prospect of a recession as well, and what that means to U.S. GDP. And nobody wants to see a decline in their biggest trading partners' economies either, because it will have an effect on the U.S. consumer as well, on the U.S. economy. So you can't just assume that you'll be fine and you'll throw your southern counterpart and your northern counterpart into recession. That actually doesn't benefit the United States either. So a lot of this doesn't make sense.
Yeah.
From an economic standpoint, it doesn't make sense at all.
So there's also talk of, federal relief for Canadian individuals, businesses, exporters. What are your hopes for how people are supported?
We're going to be, we know that there were conversations with CEOs of the major Canadian banks yesterday that there are going to be measures put in place to support businesses, export, trade exposed sectors and Canadians who may be laid off. We don't know what exactly is going to come forward, but there has to be measures put in place. Just think in 2008, there was a bailout of Chrysler, right? And the Canadian government took an equity position. And there may be some situations like that where the Canadian government is going to have to say, okay, well, maybe we take an equity position in some companies. Maybe there are loans, loan guarantees, something that we do.
I was going to say, so you think that the chat with the bankers is about some of that, about, okay, making money available to businesses that need it and the federal government playing a role in it.
And again, there could be, in extreme cases, something like an equity interest, which you hold on to until the market's improved and you can sell, which is what's happened in the past. I think all options need to be on the table, because this could turn into a crisis for the Canadian economy, and we really need to make sure that we have a unified response and be one that's mindful of what we need to do to support Canadians and Canadian businesses. So as we come through this, and hopefully it doesn't last very long if the tariffs do come into place tomorrow.
Yeah. So you're still on that if.
Yeah, I mean, who knows what the conversation between Prime Minister Trudeau and President Trump could yield today. Right now, the assumption is it's going to happen, and we're just going to have to figure out what our next move is.
What do you think? You mentioned, the threat of job losses, and that's, Ontario's giant manufacturing sector. It's wicked there.
Yep.
But what does that look like here?
Well, obviously everybody's going to be looking at investment strategies. People are going to be looking at how they manage through this. If you're selling less goods, it means your profit margins are going to change. Are you going to keep the same staffing? What does your cost structure look like? And if we start to see layoffs in Alberta and in Calgary, it's going to cause discretionary spending to drop. That means retailers, restaurants, those discretionary expenses could be there. Those are the first ones at risk, regardless. And as things get more expensive, people will also think twice about going out and doing other things.